Hello, today we'll be talking about our client dashboard and walking through some of the ins and outs of that program. So what I'm going to do, start by talking about the easiest way to access the program. Let me share my screen here. So what you're going to do, you'll receive an email with an invitation that will give you your login and you can set that up. But if you've forgotten how to access that, the easiest way is if you just go right to our website at idealretirementsolutions.com. Once that loads, you'll see a button on the top right that says Client Login. If you click that button, it'll bring you right to that login screen. Now, because I'm already logged in, it's just asking if I want to return to the dashboard, but you can just log in from there or return to your dashboard. So once you log in, it's going to look a little like this. Some of the buttons may be different depending on your permissions that are set up. If you're not sure, you can always contact our office and we can help you look at that. I'm going to start with the basics here. So when you log in, you're going to see a dashboard with just a snapshot of what is currently set up in your profile. You'll see things like the tax allocation summary. This will give you an outline of how much of your savings is taxable, how much is tax deferred, and how much is tax free. You'll also see a snapshot of your net worth, your assets minus your liabilities, and an estimated federal income tax rate. Now, we're going to look at how all this information is predicated, but this just gives you a kind of an idea of what things look like at a high level. Where I would recommend starting with our dashboard is always going to be the profile. So if you look at the top right and you go over to profile, this is all of the data that's going into the system, and without the proper data, none of the rest of the system will be accurate for you. So you always want to start with the profile. Now, if you've already been invited to this, we should have much of your data already in here, but we don't have everything. And we also can't link some of your other personal accounts that maybe are not held with the firm, but you still want to include in your plan. So that's where this will come in for you. So I'll walk through each of these and give you an idea of what you can do in here. The first screen here is net worth. This is where we want to be detailed and give a breakdown of what assets and liabilities you have in your name. So if you look at this example here, I can click on any of these items on the left and look at what that is entailing. So for example, in this one here, we've got a bank account, 90,000. You can see it actually compromises of a joint bank account for 40,000 and a Suncoast CD for 50,000. If I go further down and look at the investments, you'll see all kinds of different investment accounts in this example. We've got, and actually I'm going to delete this one so I can show you how to do that later. Okay, maybe I won't be able to do that. But you'll see all different investment accounts. Now you'll notice some of these say manual, which just means that we manually input that data. And then this one here, this was the example I had given previously. It says Schwab API 6 hours ago. Our recommendation is that you link your accounts directly so that that data feed is sent each day. The reason you do this is it makes it so you don't have to have regular manual updates on your accounts. And you and us as advisors, we can see real-time data. So when you're trying to make decisions, crunch numbers, look at projections, the better the data, the better your projections will be. And how you do that on here is you're going to go to link account. And on your screen, it should bring up this integration software here where you can type in what type of account you have. So if it's Chase, for example, you bank with Chase, you could link your Chase accounts. You can also link credit cards here. If you link your credit card, it will actually give you access to a separate budgeting tool where you can, tell the system what your budget goal is for each category. And then you can see if you're going over or under in those categories, and it helps you stay truer to your budget. You could also find things like, let's just say you had a Fidelity account, or you had an old 401k that was with Empower. You can type these in here, And that's going to bring you directly to a feed where you can link that to the system. Like I said, the more you link, the more accurate this data will become. If you do have Schwab accounts with us or certain other accounts, we will have already linked those on our end, but we won't be able to link anything outside of those primary accounts. The other way to add an account is just to click this Add Account button, and that's going to give you a drop down of all different types. Now, so far we've talked about bank, we've talked about credit cards that you could link those, and we've also talked about investments. So, for example, if you clicked Add a Bank Account, let's just say this couple also had a savings account. You would just tell it who owns it, in this case a joint account, whether it's included in your plan. You can name it if you'd like. So this is our joint savings account. If you want, you could put the name of the bank. Now this is only if you're not going to directly integrate it. And then you would put the amount. You'll see that now is part of this bank plan. Same thing with investments. I'm not going to go into things like stock plans or some of the insurance or business pieces here, but you certainly could do that. And this would be if you own a business, for example, or you own a portion of a business, you would just go to Add Account and then Business, and it would walk you through. What we have done here is we've added a mortgage. When you add a mortgage, you can tell it, the terms of the when it started, how long it's good for, what the interest rate is, what your plan is it linked to a certain home? And then same thing on here, property. You'll see the primary home and then the rental property in this case. Once you go into rental property, not only can you put purchase price, the current value, you could also line out the property tax, the insurance, and so on. This is all manual process, but it helps your data be as accurate as possible. The other thing we can put in here, in this case, it's a rental, so you could put what your monthly rental rate is, an estimated vacancy rate, because we know it's not 100%, not booked 100% of the time or not rented 100% of the time. And then if you have an annual rent increase that you want to show when you're looking at projections. We can also put a total tax basis and then the year of the sale. Now, if your plan is just to keep a property in perpetuity, you would just put end of both plans, which means you'd keep it, until you're gone. But you could also say calendar year, for example. You could say, well, I think we're going to sell that in 2030. And you can see how that would impact your plan. But in this case, we'll leave this one as is. So this is the asset piece. Like I said, highly suggest integrating the accounts if you are open to that and if it makes sense to you. But if not, you could add accounts manually. Now, moving on to the next piece here is goals. Goals is primarily going to be around your retirement. So if we look here, we have retirement age. You could tell the system at what point do you plan to retire. You could also specify the month if you wanted to get a little more granular. We have retirement expense. This is a blanket way of saying how much per month that you'd like to build in for living expenses. This is a simple approach. If you prefer, there's also a detailed worksheet you could use. So let's just say that you weren't sure how much you're spending and you wanted to go through an exercise to really determine what that looks like. You could go to a detailed worksheet and then you can go and research each of these pieces. How much on average are you spending on dining out, entertainment, health and fitness, travel, and so on? In this case, though, we'll keep that blanket monthly expense. I also had mentioned here, if you do link your credit cards, there is a new budgeting tool that opens up that could help you determine what your real spending is. You'll also see long-term care costs. So if you want your plan to assume that you're going to need some long-term care, we can build that in as well. And we could even use cost estimates or customized amounts. You could also just say, I'm not worried about long-term care for this exercise. But the default is usually planning on the last 2 years of life. Some other goals that you could add. let's say that there's a wedding coming up or you're planning on purchasing a property. There's a lot of different things that you could plan. This would give you a chance. Let's just use car as an example. If you knew that you were planning on buying a new car in 2027, we could tell the system that that's a one-time purchase, that you're going to buy it. We could tell the amount that you anticipate that being, and then who's going to be owning that car, and then whether you're buying, leasing. If you put leasing or financing, it'll open up another drop down, and you can show the terms here. But for today, we're not going to add any additional gifts, but there's or any additional goals, but there are options to do that. Now, under income, the next tab over, this is where you'll see, and again, this is very important. These things may change over time, and this is not something you can directly link. You have to tell the system what your income looks like now and into the future. So one of those pieces is Social Security. And again, if we've already set this up for you, this should be accurate unless there's been any changes. But there's a way to use a simple estimate, or oftentimes what we'll do here is we'll use the Social Security statement value. So we've actually looked with you at your Social Security statement or looked it up on ssa.gov, and we're using those values to predict and look at what your either what your Social Security is today, or if you haven't claimed it yet, what it's scheduled to be worth in the future. If you have a salary, you can also put that in here. You can put that ends at your retirement. Now remember that retirement date is based on what you've set as the goal for retirement. If you didn't want to use your retirement date, you could just put a certain year or a certain number of years from today. And then whether or not you expect an annual increase in your salary. Some other things you might see in here are things like a pension. So in this case, we have a $10,000 pension. And we're expecting that to start in calendar year 2026. You can always adjust this and make it more accurate. We can also put if there's a survivor benefit, for example. Sometimes there could be 100% survivor benefit. Sometimes it's 0. Sometimes it could be somewhere in between. So just telling the system how all that works. Some other things that you could add in here. If you had income from self-employment, an annuity, if you knew you were taking a distribution from your retirement accounts, or if you had any of these other options, you could add those as well. The next piece is savings. This piece is generally not used unless you're still working and you're still contributing to your savings accounts. Oftentimes, if you're already retired, you're not contributing anymore, you're actually taking money from the account, so you would leave these blank. But if you're still working and receiving a 401k, you could simply go in here, put how much you're contributing, whether that's based on your total income, are you getting a match, and so on. As far as expenses go, this is talking about your pre-retirement living expenses. So very similar to our expense goal in retirement. You'll see the simple approach and also the detailed worksheet. Also, the default here is to look at your taxes and fees as based on your filing status. So if you're married, filing jointly, if you're non-married, filing single, and so on. Okay, family. This is where you've got you and if you have a spouse as well, and you'll put in your date of birth and so on. Like I said, most of this should be already filled out. Blueprint's an interesting feature where you can just get a snapshot of actually the breakdown of the assets. This piece is great if you're doing estate planning and you're putting together a trust or wills. You can look at who owns what name is it held in, and then you can build your estate plan based on that as well. There are some other pieces in here you could look at, like goals. If you've set certain goals, we had mentioned before, maybe you're purchasing a vehicle, you could build out a timeline of what your goals look like over time. And then same thing with income and expenses. Whose name is the income in? And is it shared expenses? Or if, let's say you're a married couple and you each have different expenses for the household, you could break that down separately here as well. So that's your profile. Again, everything else in the system really depends on this profile being accurate. If you go run other tax or retirement projections and this is not accurate, you're actually doing yourself a disservice. So you always have to start here. A couple other things I'll touch on. The first one is the tax tab. This is a very popular tab. Now, again, if you don't see this on your login, you just need to notify us so we can make sure that's turned on for you. But I'll show you just a couple of quick things you can do in here. I won't be able to go through everything in detail, but this right here, this screen is giving an estimated marginal tax rate over time. So you can see this couple right now, while they're still working, their average tax rate is just over 20%, including their FICA. Once they stop working, the FICA goes away, and now it's just federal. There's a period of time where they could suppress their taxes, but then they need income for retirement. So you'll see what that's projected to look like over time. Also, if I click on details on the right, this is where we can look at a projected 1040. This is a great way to do some tax preparation to kind of anticipate what this is going to look like. And it's a great spot check to see if there's any irregularities in what you've put in your profile. This should give you a pretty accurate breakdown of your gross income, deductions you'd qualify for, and your total tax bill. You can also take a look at this into the future, so we could project out what these things would look like in any given year. You can also look at some other things here, like how much of your Social Security is taxable in different schedules, but for most people, it's the 1040. Now, if you click on tax strategies, which is the next tab over up top, this is where you'll see things like Roth conversions and whether it makes sense to do something like that. So under action items, let me back this out to none for a second. So right now, our proposed plan is showing no difference in taxes from the current plan. In other words, we haven't told the system to try anything differently. Now, if we wanted to start looking at the impact of a conversion, the easiest way to do that is if we're under the conversion target of ordinary income, we have this button here called fill up the tax bracket. Well, let's just look at the 12% tax bracket and refresh. We can see now the system says over the course of your lifetimes, you actually have a higher tax adjusted ending asset, lower taxes paid, and less money coming out of your tax deferred accounts. A screen I like to look at when we're looking at a proposal like this is the calibration screen. What this does is it shows us in green what that conversion strategy looks like as far as your overall tax rate. So whenever we do a conversion, we're willing to pay some taxes when we absolutely don't have to, but we're doing that for the long-term benefit. So in this case, you can see that gap, that short gap between retirement and really needing to draw out funds for income. We could use some of that to have favorable tax rates for a conversion. That's what this green is showing. And that's what the summary is telling us the impact of that over time. Now, let's say we brought this to 22%. We could see it's actually maybe even a slightly higher benefit. And now it's this much smoothed out tax rate over time. Now, sometimes people are concerned with what this will do to their IRMA or their Medicare premium increases. So if you'd like, you can simply go down to the conversion target, click on Medicare premium tax bracket, and then you can select either no IRMA. So how much could you convert without affecting IRMA at all? Or you could look at maybe you're okay with tier 1, but you don't want to go into tier 2 through 4. So if you did tier 1, which is a $96 a month anticipated increase, you can see what that looks like. In this case, no IRMA probably made the most sense. We get a bigger benefit over time. We're not increasing our Medicare premium and so on. Now, if you're wondering, well, what does this look like? And if I'm going to convert up to the no IRMA, how much can I actually convert? That's where you would look at details on the screen. This will show you the amount of the anticipated conversion and also, where those funds are coming from and what the balances look like over time. Now, certain assumptions are built into the system as far as growth rates and so on, but everything else is based on the current tax law. And then you can also see a comparison of the plans here, your invested assets or any of these other pieces. If you wanted to compare the federal taxes paid, the green, and you can kind of see how it goes behind here, that'll show you the difference from the blue, which is no conversion at all. Now, again, this is getting a little in the weeds as far as what the system can do. But if you're ever not sure, this is a great conversation to have with our team. And likely we've already had this conversation with you, or at least started the dialogue around conversion, if it makes sense for you. Quickly, I'll touch on the estate tab here. This is simply a checklist. This is meant to be a helpful piece to know what you've created and what you haven't. So if you already have wills, power of attorneys, trusts, so on, you can kind of check those off in here, and that lets us know that those are done. And if there's any other documents that you wanted to name that you've completed in here, you could add those manually as well. If you wanted to look at listing beneficiaries in here and who's your beneficiary for each account, you do have the option to do that for these accounts. And then also just an analysis of what your estate plan looks like. Our recommendation on the estate plan, if you haven't already addressed those concerns, we have our estate plan division, which is a much more robust way to tackle the actual creation of those documents outside of this system. What this system's good for is simply to keep track of what you've done or haven't. The last thing I'll talk about for today is this retirement tab. If you click retirement at the top, there's a lot that you can do in here. So you can see the current plan is going to give you all the information based on your profile, everything you've set up in the profile here. The proposed plan is going to show you anything that we've told the system to change. So in this case, we had looked at, what if we had no long-term care? What if we lived to different age spans and so on? I can simply reset this and it'll go back to the status quo of the profile. But let's just say I wanted to say, well, what if we live past 90? What if we live to 100? Mr. and Mrs. Client live to 100 years old. How will that affect their plan? We can refresh that and we can see that it does drop the probability of success slightly, but on average, they're still in really good shape. Now, the number one thing that we generally recommend adjusting in here, if we're looking to stress test a plan, let me fix that piece there, is monthly spending. So let's just say that the plan was to spend $10,000 a month on average, but oops, we're spending $13,000 a month. Well, you can see that starts to really affect the longevity of the plan. And you may not feel that short term, but when we look at the long-term viability of the plan, it starts to eat into the probability of success. So if you're not sure about spending, or if you feel like it hasn't been consistent, that's a good way to just get a quick pulse check on what that means for you. A lot of other things we can do in here, but again, I would recommend getting with the team to help look at some of these. The last thing I'll touch on here is cash flows under retirement. This can be a very helpful worksheet. If you go to summary, this is essentially the numbers behind the plan. So the income coming in, here's your salary, your Social Security, your pension, what that total looks like over time. And then we can also look at other inflows. This would be the rental income. Break that down into the rental property. Likewise, we have our expenses. So living expenses, housing expenses, healthcare. In this plan, we've actually built into the living expense, but you could break that out if you preferred. And then your estimated tax payments and so on. So if you look at the end of this and you see a positive net flow, That means that you're anticipated to have more income than you do expenses, and that includes your tax payments. If you see a negative, that means we have to make that up somewhere. So in these 2 years, for example, we're going to need to go into those retirement savings to fund some of the lifestyle. And you can see what that's anticipated to look like over time. Everyone's plan will look different here. There's other pieces you could see as far as your net worth, invested assets, accounts, and so on. The last piece I'll mention is this folder right at the top. This white folder is what's called the vault. This is a great way to have a shared folder with your advisor where you can both share documents and you'll each have visibility. You can see in here we've set up a folder called annual tax returns as an example. So as you're getting your taxes done, you could be, keeping those filed in here for your own use, but also if your advisor needed to reference that with you. There's also a private folder, and that private folder your advisor will not see. This is if you want to keep any documents in here, maybe that pertain to you and your family, but don't necessarily have any kind of use case for the advisor. You could put those in the private folder. So shared folder, private folder. This is a great way, for example, we've had clients call us while at their tax professional and say, hey, I need that 1099 or I need that statement that came through. We can quickly add that to your vault and you can log in and retrieve it. Going back to the dashboard, just to wrap things up for today, the biggest thing is having your profile be accurate. We highly recommend linking accounts if you can. It's going to make everything better as far as what the system can do. But there's a lot of functionality in here between taxes, retirement planning, estate planning, and so on. So this is just meant to give you kind of a foundational insight in how to use the system. But if you have any questions at all, please reach out to us and we're happy to help. And again, we'll help you build this out as however necessary if it's a tool that you'd like to use as well. Thank you for your time and look forward to talking to you all soon.